What is going on YouTube? It's Sankey. We're back with another one. Alright guys, it's been another red day out there in the market. So firstly, I hope you guys have been remaining calm, but also sticking to the strategy. That is picking up these plays on the cheap and dollar cost averaging down on some of your existing plays. I'll let you guys know, now is crunch time. Your actions determine if you're going to be a winner in the markets in a couple of months time. You guys know over here we don't panic sell. You got to detach from your emotions and think rationally. Just stick to the strategy. You're going to hit success in the markets with me once all this blows over. Now, I've got a couple of plays that I want to put on your radar. So before I get to it, I'm going to need you guys to hit that like button for me. And if you're new, hit that subscribe button, join the journey. Now, before we jump into our first play, I want to touch on an upcoming opportunity for us. Now, as you guys know, there's a couple of upcoming IPOs I want us to consider taking full advantage of. One I was recently talking about is Coinbase. Another that's been announced today, that's Deliveries, and that's coming to the London Stock Exchange. Now, here you guys, some of you are asking for some more UK listed plays. They're on the way. What I must say is the UK, they're starting to change the regulations and make it more easier and attractive for companies to list on the exchange. So going forward, we should see some good plays coming to the London Stock Exchange. Now onto Deliveries. More information is coming out on the 8th of March. So when that's released, I'll be letting you guys know. They've got some good future growth potential for the expansion of their groceries business. So this is one I want you guys to keep on your radar. So I thought I'd just touch on this before we get started. Now each week I like coming at you guys with a couple of plays to keep in the portfolio, not sell out of no matter what the market throws at them. Because right now we know the market's being very testing with a lot of different plays, but you guys just have to brush past the noise. So we're going to kick things off right by starting with DraftKings, ticker symbol DKNG. Now this is a sports betting play in the portfolio. Last time I mentioned DraftKings, they just completely crushed their earnings. Q4 outperformed. Guidance for 2021 outperformed, set to do around 1 billion in revenues at the top end. Now, by judging by the velocity of the business right now, they're going to hit that number. Right now in the markets, as I said before, there's a lot of noise, a lot of volatility, chaos, panic, you name it. But under that dark cloud, there's a lot of plays that are hitting their business objectives month after month. And these are the plays that you guys need to be focusing your attention. Now, DraftKings is one of these plays. As you can see on the day, down 6%. But that doesn't correlate with how the business is performing right now. In the last 2 days, they've made 2 great partnerships that I want to make sure is on your radar. The first is with the UFC. So they've made a 5-year agreement with the UFC where they're going to have in-game promotions, have UFC branding, and this is going to expand their audience to the UFC fan base. Now, Dana White, that's the CEO of the UFC, he's come out, he said he's excited by this partnership and that DraftKings are the best at what they do. Guys, we already knew that. That's why we had this play in the portfolio. Now, going forward, I expect much of the same from DraftKings. Now, another partnership DraftKings have made over the last 2 days is with a company called Dish. They're a TV company. They do the live, on-demand, recorded TV. Now, they're integrating DraftKings app into the platform to create an all-in-one entertainment hub. This is a good business move from our play because again, it just gets them in front of another audience. So you can see how DraftKings, they're making these partnerships, getting in front of the audiences, allowing them to use the platform in a convenient way. So I like this one. Again, going forward, I expect much of the same. So if we look at the charts now, we're sitting at $61 with this play. It wasn't long ago before this was a $70 play off the back of good earnings, but the markets have done us some injustice and brought that stock price down. But this just gives you guys another opportunity to pick this one up and add them to the portfolio if you haven't done so already. When all of this blows over, we're back to normal. This is going to be a $70+ play. Up next, that's Neo. Now, you guys wanted me to touch on this one. Over the last week, the investors were taking no prisoners when it came to earnings season, and it gets like that sometimes, especially in a weaker market. That's what you guys need to know, and that's what happened to Neo. So revenues did okay, but we received a wider loss than expected on their earnings. And I remember telling you guys I'm expecting that wider loss due to the investment and other things they've been making into their business. So as you can see, Neo currently sitting at $39. Now what you guys must know is they've broken through a key support level at around $40. We know if you look, they were trading at around $40 consolidating back in December. They've broken through, so they could come down to the mid 30s. So if you're looking to pick this one up, I wouldn't rush to grab this one right now. See if you can pick this one up at the mid $30 range. But as we look forward, I'm expecting this one to double up from where they're at by the end of the year. Got to remember, upcoming, they're unleashing their sedan, so we should be expecting some pre-order numbers. Their technology is good and they're progressing in the autonomous driving space. Also, they're expecting some good deliveries as we progress through the year. Must let you guys know there's going to be some semiconductor shortage and some issues there, but still they're in good standing to produce some good numbers going forward. Also got to remember, this is a business with a good brand down in China, and as more gas vehicles switch over to electric, they're well positioned to take full advantage of that. So if you're at a loss with this play right now, I wouldn't sell out. Just wait, be patient with this one as we progress through the year. Wait for the catalyst to take effect. Up on screen, that's Clean Energy Fuels, ticker symbol CLNE. If we look at the price performance on the day, negative 0.49%. That's pretty much flat on the day. Flat in a day that's very challenging and testing in the markets for these plays. So that's great performance. Now, if there's any plays in your performance that are flat on the day or even outperformed, guys, this is a sign that there's good things to come for these plays. Now, I'll let you guys know that today, Clean Energy finalized a joint venture with Total to produce renewable natural gas, that's RNG for short, infrastructure in the US in anticipation of the ramp up in demand for RNG as we move forward. So this is a good deal, it's good size, and set to generate them good revenues as we go forward. Clean Energy, they're a good player in the industry. Now, if we look at the charts, we can see this play's come down heavy over the last weeks. We know there's been a rotation of funds in the market out of technology, out of clean energy, into some of our rebound plays, into some of the banks. But where do you guys think that rotation of funds is going next? Things are going to come full circle and fly back into the tech sector, into the clean energy space. So it's only a matter of time before justice is served and we see an increase in clean energy. Up on screen, that's Skillz, ticker symbol SKLZ. Now, I'm not going to dwell on this one too long. I know a lot of you might have bought this play in the 30s as it was coming down, now sitting at $28. Just use this as an opportunity to dollar cost average down on this play. This is a solid play. We know their earnings are coming out on the 10th of March and I'm expecting good things. Got to remember, they just partnership with the NFL, and that's going to produce hundreds of games on the platform, give them variety and introduce them to NFL's audience. Also, one of the keys with this play is that this is a high margin business, so I'm expecting some good profitability levels. In your portfolio, guys, you want these plays that are unique, that have good balance sheet and have good leadership, and you have that in a play like Skillz. Alright guys, been rocking with the channel, you know what time it is. This question comes from Stock Mania, says, can you do a video about when to dollar cost average when portfolio plays dip like Neo and Plug versus adding new plays to the portfolio? How do you pick how to allocate your cash? So this is a great question, so thank you for sending it in. The first thing you guys need to do before you start considering dollar cost averaging into a play is look at how much your portfolio is already concentrated in that play. In a good balanced portfolio, you don't want any one play taking up more than 10% of your portfolio. This is because any volatility in that stock price is going to affect your portfolio too much. Yes, when the good is going good, your portfolio is going to be flying, but all things being equal, when there's volatility, that portfolio is going to come down with that play. So remember, do keep that diversification. And that's some key portfolio advice for you guys. When some of your plays start blowing up, taking too much room in the portfolio, it's time to trim profits, reduce that concentration. That's what the fund managers do. They're always looking at the concentration of their plays, ensuring not any one play is taking up too much room. So going forward, do bear that in mind. In terms of dollar cost averaging, you guys know the strategy is to nibble at these plays. We don't go all in at any one point in time because you might be able to get a better price the next day or the next week. So it's always worth holding off. Now, when it comes to dollar cost averaging, you guys know the strategy is to nibble each time. We never go all in because you might be able to get a cheaper price the next day or the next week. Now, there's many methods to tell you guys to determine when to dollar cost average into these plays. If we take a Neo, for example, I mentioned they broke their key support line. So the next time to dollar cost average into this play is when it meets its next key support line, which could be in the mid 30s. So you want to hold off till then grab some stock. If it breaks the support line, then you grab a bit more. Now, aside from the key support, you can also be looking at the chart indicators, and I'm showing you guys that before, the Fibonacci, the RSI, and the others, to give you an indication of when to pull the trigger to dollar cost average into these plays, looking at things like when it's in this oversold region. Now, in terms of adding new plays to the portfolio, the first thing you guys should be considering is, do you have room to add a play to the portfolio? Now, you guys know I say if you're a beginner, have 0 to 10 plays in the portfolio. If you're intermediate, have 10 to 20. And if you're advanced, have up to 30 plays. Now, if you have room to add a play to the portfolio, then you need to start looking at the risk level of your portfolio. So if you have a risky portfolio, you might want to add a play that's less risky to give you that balance, and forego a play that's more risky but higher growth. Now, if your portfolio is more balanced, less risky, and you have some appetite for risk, you can start considering adding those plays that are a bit more risky but high growth potential. It's all about keeping things balanced. Alright guys, that wraps things up. Now, as we progress through the end of the week, I'll be coming at you guys with a ton more videos to give you that support to help you guys through this volatile time in the markets to ensure that we all come out victorious. It's only a matter of time. That being said, do hit the like button for me, hit the subscribe button, and I'll catch you guys in the next one.